Apparently, the stock market is in one massive bubble. Shiller PE ratios are huge, Buffett indicators are going off the charts, and you are paying way too much for your stocks. And with inflation coming and interest rates possibly going up, the markets are about to crash. But is it possible with all this inflation coming that stocks are actually undervalued right now?
I'm amazed how many people own stocks. I'm amazed how many people own stocks.
Welcome back everyone, my name's Paul. I'm new to investing and I'm trying to figure out exactly how this stock market thing works. I have a dividend investment portfolio with Trading 212. We will get back to that later. But the main news here in the UK is that on Thursday, the Bank of England Governor Andrew Bailey decided that inflation's not really that much of a problem. It will be a bit bumpy this year, but there's no cause for alarm. What the fuck does that mean? And also Janet Yellen, who is the US version of our beloved Rishi Sunak, who coincidentally came first and second in the global Who Looks More Like a Cartoon Bird contest in 2020. Janet Yellen has also come out and said that she sees no inflation problem. This is just 2 days backtracking after she said it may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat. And this is now very confusing. Is there going to be inflation? Is there not going to be inflation? Should we pull our money out? Should we keep it all in? And in case you don't know what inflation is or what it does or why it exists, it's very simple to explain. See, this image shows the difference in sizes of world stock markets between the dates of 1899 and 2017. These two pies just show how money moves around the world, and you make money in the stock market by buying something in the USA at 15% and then selling it again to some sucker at 51% 100 years later. But this isn't inflation. Inflation is very simple. Are you ready? Whoa! And that's it. That's all inflation is. Over the 100 years, things just get bigger. As we grow stuff, as we dig stuff up, and as we print more money, the pies just get larger. Everything within the pies stays exactly the same. They just get bigger. And the important thing with inflation is that it doesn't get too big too fast. If inflation went up by 20% overnight, that means your food's going to get 20% more expensive overnight and your wages didn't go up with it. So all of the central banks seem to target 2% as the correct psychological amount that they can raise the price of pretty much everything and you won't notice too much day to day. And at the moment in the UK, we have an inflation rate of 0.7%. If you compare this to historical inflation rates in the UK, in the 1970s and the 1980s, we had inflations of 15, 16, 17, up to 24%. And this amount of inflation caused stock markets around the world to go absolutely berserk, some of them never recovering at all. And in 1993, we seemed to calm inflation at around 2%. And inflation has been around this amount in the US and the UK for quite a number of years. They like to keep it this low and quite steady so people don't realize they're getting screwed out of money, governments don't collapse, people continue to get elected, and people don't start to get a bit fighty. And when you inject huge amounts of stimulus into the economy and protect people's jobs with furlough schemes, and I think the UK government is buying about 400 billion worth of UK bonds every single week at the moment, with that sort of spending, inflation kind of has to happen. More money means more spending and more demand. That's less supply means prices go up. Everything inflates. And when prices get too high and everyone starts posting on Facebook about the prices of Freddos or whatever, then we know that inflation has gone up too much. And the way that governments bring that inflation back down is with interest rates. And for as long as I can really remember, the interest rate has been about 0.5%. Until very recently when it went down to 0.1% because we all got ill and stuff. And finally, after all that explanation, I can now tell you why stocks will go down. But you probably already knew all this because in the news we're talking about the US 10-year Treasury note. When the Treasury yields rise, stocks go down for some reason. The stocks go down because the interest rates change the risk equity premium. And it's very simple. Back in 2008, 10-year treasuries were worth about 5%. So you would get a 5% year-on-year return from a 10-year treasury at extremely low risk. You wouldn't have to go into a dividend stock or even a growth stock and earn 5% a year. You could do it without any risk to your money. That treasury yield has come down to 0.6%. That's now below inflation and way below anything you can get in the stock market. So now that you're in treasuries at 0.6%, you're guaranteeing that you're going to lose money. This has created a herding mentality that has moved everyone away from bonds and safe investments to high risk returns. So the stock market is now getting very, very overheated because everyone's over there. And by raising interest rates and controlling inflation, maybe the US government, the UK government, and the ECB can all maybe avoid the Japanese asset price bubble. The Japanese asset price bubble was in 1990 when the Nikkei stock exchange completely collapsed. I'm telling you, never recovered ever again. The bubble was characterized by rapid acceleration of asset prices and overheated economic activity, as well as uncontrolled money supply and credit expansion. More specifically, overconfidence and overspeculation regarding asset and stock prices were closely associated with excessive monetary easing policy at the time. Oh my God, does that sound similar to anybody? Does that sound vaguely familiar? And that's what seems to be happening because low interest rates have caused everyone just to go into the market and just buy the market at any old price. If these interest rates were likely to come back up to anywhere near 5% because we started seeing quite high inflation, because that's the way the government controls inflation, by raising interest rates. If that started to happen, the herd would start to leave stocks in droves and go back to things like bonds and safer assets and high yield savings accounts because they'd be paying so much money for safety. And just for reference, between 1985 and 1990, the Nikkei stock market only expanded 3.4 times, but it did expand 10.2 times over a much longer period. Currently, it looks like the stock market is probably expanding well within that rate at the moment. And Andrew Bailey and Janet Yellen don't believe that inflation is happening. But surely this is inflation, and this is inflation, and this is inflation. These are market problems which do look like an asset bubble, which means you should be really scared of stocks. So now that I have scared you, I want to show you that it might not all be bad. Warren Buffett does believe that there is inflation. He says he's seeing it within his business. There is, however, a lot of evidence that does show inflation is very controllable. We've done it since 1993 with no real problems and increasing fiscal stimulus. The UK, the US, and the European Central Bank have all been printing money now for absolutely ages, and inflation has relatively stayed the same for quite a long period. But it doesn't get away from this asset bubble, which may just be caused by index investors who are investing pretty much blindly into the market, which is slowly inflating everything. And we're already seeing quite significant declines in prices due to risk appetites changing all the time. Stocks like Peloton and Zoom, who were massive darlings of the whole COVID crisis, are now starting to see their reversion to the mean. And just this year, stocks like Zoom are already down 47%. Maybe a good dip buying opportunity, but I still think some of these stocks are properly overvalued. But because we have done very well at controlling inflation, and it is very unlikely that in the short term at least we'll see hyperinflation within like the next 3 or 4 years, it's very possible that this inflation will just go up to 2% and then be perfectly fine. That'll only change the base rate back to about 0.5%, and it won't really change the US Treasury rate back up to 5%. And ultimately, this comes around to where you want to be within the stock market. You can be in your index funds and keep buying and buying and buying, and in general, over the long term, you should do very well if you stay the course. The market is all about psychology. Everything I've just said in the past 10-15 minutes has got to be really, really scary. I've brought to you a lot of evidence that could mean stocks will go down. But risk equity premium says that your stock returns are only relevant to where you can get money safely, which right now is nowhere. Stocks which look like they might be considerably overvalued, like Nvidia, which is a very high quality company, lots of cash flow, paying a dividend, and in a very good sector. It's the head of its sector. I heard the other day that it has 26 out of the 27 supercomputers in the world. Nvidia is likely to be the company of the future in AI and chips and data centers, all that sort of thing. You might only earn 4.34% year on year. This is a pretty terrible return when you compare it to, say, the S&P 500 average return of about 6%. But in comparison to bonds right now, that's an epic return. And I'm not in Nvidia yet. I would like the price to come down to somewhere like 400 before I would like to get into Nvidia now. It's a company that I simply missed. It's one that I would love to get into, but I'm not ready to pay that sort of premium when I think there are a lot of other options out there that are pretty good too. So some of the top growth stocks out there are still undervalued compared to what you can get for risk-free. That's the reason why I'm staying in the market right now, because I can't see any other place in the world where I think I can get a better return. I'm not going to be very good at real estate. I don't have any time on my hands right now, so owning another house or a couple of properties, that just isn't going to be good for me. So the stock market does seem to be the only place where I can generate some wealth. I feel like I have been a bit forced to do this. I feel like the government is forcing me into riskier and riskier ways to make money with my money. But my aim is to minimize that risk by buying high cash flow companies that give back to their shareholders, whether that's in share buybacks or if it's in dividends. At the moment, I have this dividend reinvestment portfolio that I have with Trading 212. It carries a wide range of companies, and right now it's actually doing pretty well. It's actually beating the market by a good 2%. And I'm sure this won't stay the same way forever, but it's the best way that speaks to me, and it's going to help me stay in the market through the bad times, because psychology is so much more important than any stock picking, any PE ratios, any price to cash flow, price to sales, revenue growth. The most important thing that's going to grow your money in the stock market is keeping your head in the game. And whichever way that's going to work for you and keep you in the market, that's going to be the best way. For me, I like buying undervalued companies. Microsoft is one of those massive companies which has done really, really well for me over the past year or so. I'm really struggling to buy more of it right now though, because it is growing. It's growing at a huge rate. I think Microsoft grew its Azure products by 50% year-on-year growth. This is a huge company that is still growing parts of its business like it's a startup company. So there are amazing things about Microsoft right now, but people know. People have seen it, and they seem to be happy to pay any old price for this amount of growth. Technically, I should be selling Microsoft right now, but that's a different story. That's another mindset thing which I'm probably not going to be able to get over. I can't really sell many of these companies because I also don't know where they're going to be in 5 years. This price could just continue to go up. I'm sitting at 27,063 right now, and that is a stupid amount of money. It's more money than I've ever had. So it's in my sort of financial genetics to try and preserve this rather than risk everything and just grow it. But I hope to just keep plodding on, keep growing it year on year. Hopefully these companies that I've bought into will continue to grow all the way through 10, 20 years, and maybe one day I'll have a nice big nest egg that I can sit there, retire on, or just drop down to part-time work every now and then. And Andrew Bailey also had some strong words for you if you're getting into crypto. Be prepared to lose all of your money. He also said, I'm afraid that cryptocurrencies don't have intrinsic value. Now, that doesn't mean to say that people don't put value on them, because they can have extrinsic value, but they have no intrinsic value. And you know what? I kind of agree. Bitcoin has no real fundamentals. I'm pretty certain of that. Dogecoin has now made its way onto eToro, and Dogecoin is essentially exactly the same as Bitcoin. There's no real differences in Bitcoin and Dogecoin other than very slight inflationary differences, but there's also no difference between Bitcoin, Dogecoin, and the 4,000 other coins in existence that could also be the coin of the future. Dogecoin just seems to be one of a million, and here on eToro you can see Dogecoin's path all the way to 6 cents, and now it's in this consolidation period where people are just completely confused. This video is going out on Saturday morning, and this confusion right here is waiting for Saturday night, because Elon Musk is about to go on Saturday Night Live, and he's probably going to say something about Dogecoin. Everyone is absolutely hanging on his word. Some people here are taking profit, a lot of people are taking profit, and some people are getting back in, ready for that second surge all the way to $1. And the thing is, there's nothing else. No one's spending Dogecoin day to day. No one's going out and buying bread and milk with Dogecoin. Unfortunately, there's nothing separating Dogecoin and Bitcoin right now in fundamentals. And unfortunately, that's why this is all stupid human behavior. If you put in 200 quid on Dogecoin right now, you've got a chance of losing 200 quid. But admittedly right now, it is a 50-50 chance of it going higher and heading up to $1. That'll double your money pretty much overnight. So if you are getting into cryptocurrencies like Dogecoin right now, you've got to realize that it is pretty much a 50-50 chance. There's no real fundamentals that are backing it up. And what you are doing is completely speculating and completely gambling. But there's no doubt that it is possible that with just 200 quid, you could lose all that money. But Dogecoin has for some people, and could continue to be for other people, a bit of a lottery ticket. I'm still with Ethereum and Bitcoin with a very small amount of my net worth. I think I've only put in about 200, maybe 400 quid, something like that, and I'm currently £1,000 up on Ethereum. I haven't really been looking at the charts for Ethereum recently because it kind of has just shot up and there's no real technical analysis that you can be doing on this. But what we have here right now is a double top, which suggests that Ethereum could head back down here for a little bit. It could quite easily drop down to about 2,800. This does appear to be the start of that big crypto bull run, the midpoint of that 4-year cycle, which does suggest that people are really getting back into the crypto space and people are going to start spending some money on it. That's my little bet on it. That's my speculation. And it's very important to recognize here that I've recognized that I'm speculating with Ethereum right now. I do believe Ethereum has some fundamentals because I do believe it's generating cash flow for some businesses who are working on the Ethereum platform with DeFi and selling NFTs. It is generating a cash flow. So there is some fundamentals that is backing up Ethereum right now. However, I would say that the cash flow that Ethereum is generating is not justifying the price that it is right now. What I'm in right now is speculation and me trying to learn how human behavior reacts to the market. Thank you very much for watching, guys. The investment app that I use is called Trading212. If you wanted to get into investing and use this sweet platform, you can sign up through a link in the description below. You'll go onto a wait list, and as soon as they've opened up all the Trading212 again, you'll be getting on and you'll get yourself a free share at the same time as I get a free share as well. Also, I use eToro to get my Bitcoin and my Ethereum and maybe even some Doge, because eToro seems to have gone absolutely Doge crazy and started to massively jump on the bandwagon. If you really wanted to get involved before Saturday night, then this is the easiest way that I've found to buy Dogecoin. There are quite wide spreads and there is a small withdrawal fee, but this is the way I've seen it. And if you wanted to sign up to eToro, there is a link in the description below, and you really help the channel up if you sign up through that link. Just remember that Dogecoin and everything are so volatile. Also, don't forget to check out the completely free Discord where I don't know what's going on in there today. We're all talking about IBM because IBM has just released the first 2nm chip. Who knew it was going to be IBM, guys? There you go. IBM, the 10x in stock of the future, apparently, because it's made 2nm chips. Well done. Well done, IBM. And also feel free to check me out on Instagram. I share little moments of my life, all about my dividends and all my buys and sells and all of my cryptocurrency theories as well. Thank you very much for watching, guys, and if you enjoyed this video, please feel free to like, subscribe, and invest. What the fuck was that?
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.